So good morning, everyone. Thank you to everyone that's logged in. I hope your day's off to a great start. My name's Hayley Campbell, and I'm the Community Engagement Representative with Florida Financial. Financial Literacy 101 is the third webinar of our monthly series, and I'm super excited to have you on here joining us. Today, we'll be covering all things finance, including budgeting, savings, goal setting, credit, and more. This is going to be an informative webinar, and I'll be providing my contact information in case you have any questions or feedback following the webinar. Let's get started. So happy Financial Literacy Month. I have my contact information in the left corner. My email address is hcampbell@wefloridafinancial.com. And my work cell phone number is 954-871-7525 if anyone wants to take that down in case you have any questions or feedback following the webinar. I'll be providing it again at the end as well. So today's webinar agenda will be covering Welcome to Your Credit Union, financial literacy lessons you may have not learned in school, and then we'll also be covering budgeting, savings, goal setting, credit, ID theft, scam protection, loans, debunking myths, and I'll also be talking about some fun financial tips and how we care about your financial literacy, as well as how to join Florida Financial if you're interested. So welcome to your credit union. To give you a little background on our credit union, Florida Financial is a full service credit union that has been providing outstanding customer service since 1952. So this is actually our 70th year of being open, and we're super excited about that and are celebrating this year. We're not for profit, so every member is a shareholder of Florida Financial. When you deposit money into your credit union account, you become both a customer and an owner. We offer low fees and high savings rates. We also offer a range of loans, including auto, personal, home, aviation, and more, which have low interest rates as well. Financial literacy lessons you may have not learned in school. Back in school, there's a lot we didn't learn about regarding finances, such as how to write a check, how to do taxes, or even how to budget. So I'm going to go over 8 lessons you may have not learned in school. So we're going to cover a decent amount here within these lessons. To start, the first lesson is to create a budget and start saving early. Even saving a little bit will add up over the long term. So no matter your age or how much you earn, now's the time to start saving. It's also important to learn how to stick to a budget because it ensures that you will always have enough money for the things you need and for the things that you want and that are important to you. We'll cover more tips on budgeting later on in the lesson. So lesson 2 is to track everything regarding your finances. This helps you control your budget and can reveal your spending issues. It also helps you track your financial progress, it reduces impulse spending, and it helps you avoid debt. Lesson 3, saving and investing are not the same. So there's a difference between saving and investing. Saving means putting away money for later use in a safe place, such as in a bank or credit union account. Investing means taking some risk and buying assets that will ideally increase in value and provide you with more money than you put in over the long term. Lesson 4, understanding taxes. Taxes are ways that the government can collect money from its citizens to pay for things that the people need, such as schools and roads. Here are the steps on how to actually file your taxes. So I broke this down into 5 simple steps to just briefly go over how to file them. So step 1 would be to gather your documents. In order to do your taxes, you need to collect all of your related documents and paperwork. Step 2, choose between the standard deduction option or itemizing. Standard deduction is what the government provides you automatically. Itemizing means you have extra expenses such as medical, mortgage interest, donations, etc., that may equal more than the standard deduction amount. Step 3 would be to pick a filing status. This would include single, married, head of household, etc. Step 4, file your taxes. And then step 5, you would start getting organized for next year. Lesson 5 is understanding student loans. A student loan is money borrowed from the government or a private lender in order to pay for college. The loan has to be paid back later along with any interest that builds up over time. The money can usually be used for tuition, room and board, books, or other fees. And this is something I, wish I would have learned before I actually started college, is understanding student loans. So lesson 6 is emergency funds are a necessity. Emergency funds create a financial buffer that can help keep you afloat in a time of need without having to rely on credit cards or loans that have interest. So most experts believe you should ideally have enough money in your emergency fund to cover at least 3 to 6 months of worth of living expenses. Lesson 7 is how to balance a checkbook. So I broke this down into 6 steps. Step 1 is to record your transactions. Step 2 is to review your monthly bank statement. Step 3, check that your balances match. Step 4, address any errors or fraudulent activity. Step 5, draw a line in your register. And then step 6 is to file your bank statement. And last but not least, lesson 8, how to build credit early on. You can sign up for a credit card early on, such as a secured credit card, youth or student credit card, or rewards credit card. Make sure to pay your balance in full every month. When you're under 18, one of your options is to get an adult to add you as an authorized user on one of their credit cards, because this can help someone who's a minor build credit early on. Now we have budgeting 101. Budgeting your money is very important and can be broken down into the 5 following steps. So step 1, you would list your income. Then you would list your expenses. Then you would subtract your expenses from your income. You would then track your transactions. And then lastly, you would make a new budget before the new month begins, because your finances might vary month to month depending what you have going on. A simple budgeting framework trick to try is the 50-30-20 rule. So this would be allowing up to 50% of your income for needs, leaving 30% of your income for wants, and then putting 20% of your income into savings or paying off debt. So that is the 50-30-20 rule. That's a good budgeting trick to try out. Some other budgeting tips are: make sure to prioritize your expenses and goals. Automate your savings by having a portion of your paycheck automatically deposited into your savings account. Definitely try not to spend more on your credit card than you can afford to pay off on a monthly basis. You can try an online budgeting app. Some free ones that I've heard good things about are You Need a Budget, Mint, or Quicken. So those are 3 free online budgeting apps. You should definitely prepare for the unexpected by building your emergency fund, and then try and track and manage your budget through regular check-ins, so you can always know where you're at. So savings 101. Saving money goes hand in hand with budgeting and is just as important. I wanted to go over some savings tips with you all that I came up with and like to use. So you can try using the 30-day rule. If you see something you want, wait 30 days before buying it to ensure you truly want or need it. You can change this to 15 days or 10 days or, whatever amount you want to use, but I like to do the 30-day rule. Save regularly by having a portion of your paycheck directly deposited into your savings account. That's a good way to ensure that money is always going into your savings. Cancel any unnecessary or unused automatic subscriptions and memberships. For example, if you don't use your Netflix account or gym membership anymore, you can cancel them so that you are saving that money instead of it going to something that you aren't using. You can reduce your energy costs by being cautious of your energy usage at home, which can potentially lower your bill. You can try an online automated savings app. Some free ones are Acorns, Chime, or Digit. So Acorns, Chime, and Digit are all online automated savings apps that are free. If eligible, definitely take advantage of your retirement savings plan. You can use cashback apps and coupons such as Fetch. With that app, you actually upload all of your receipts, which give you points, and then it ends up leading to rewards and gift cards that you can cash out. You can bundle your cable and internet, which can save money. Start a side hustle you enjoy for extra income, and definitely reward yourself for making progress and reaching your savings goals. So goal setting 101. A financial goal is any plan you have for your money. For example, learning financial literacy, building a retirement savings, purchasing a home, etc. Your goals should give you focus and keep you accountable no matter how long they take to make happen. When making goals, apply a SMART goal strategy. So SMART goal strategy stands for making sure the goals are specific, measurable, achievable, relevant, and timely. So that's the SMART goal strategy. Categorize each financial goal as short, mid, or long term. And set a target date for each goal and prioritize them as critical, need, or want. Keep track of knowing how much you have versus what you still need to save, and monitor your progress and reward yourself for your achievements. You can even make a financial vision board if you're in need of some extra motivation. A little financial board you can hang on your wall or even save it as the background on your phone or something, so it gives you a reminder to want to reach those goals. Credit 101. Credit is the ability to borrow money to access goods or services with the understanding that you'll pay at a later date. Some examples of areas where credit is important would be applying for a credit card, mortgages and auto loans, insurance and utilities, renting apartments, condos, or houses, housing applications, and job applications as well. So to build credit with a credit card, you can open your first credit card account. You can get a secured credit card, which is a type of card that is backed by a cash deposit from the cardholder. You can become an authorized user, which is something I mentioned earlier, which is when another person who is a cardholder grants you access to use their account. And you can also request a credit limit increase on your current credit card. To build credit without a credit card, you can pay all of your existing loans diligently. You can use installment loans, which is a lump sum of money that you borrow and repay in payments or installments over a period of time, which is usually months or years. Installment loans can strengthen your credit if you make consistent on-time payments. Some tips regarding credit are check your credit score and report often. Make sure to fix or dispute any errors or negative marks. Always pay your bills on time and try to keep your credit utilization rate below 30%. You should pay down any debts and outstanding balances, and it's good to keep old credit cards open. ID theft 101. Identity theft happens when someone steals your personal information to commit fraud. So here are some tips that can help you avoid identity theft. Make sure to check your credit score and report regularly. Collect your mail daily. If you receive a placement debit or credit card, make sure to cut up and discard your old card before throwing it away. Definitely make sure to cut it up. Secure your social security number. So try not to carry your card around in your wallet or your purse, except when necessary. Be wary of unknown phone calls and emails. Shred documents containing personal information before disposing of them. It's also good to wipe all electronics before donating them. Some signs to look out for regarding identity theft are look out for bills for items you didn't buy, debt collection calls for accounts that you know you didn't open, or denials for loan applications. If you do end up dealing with any suspicion of identity theft, you can report it to the Federal Trade Commission online at identitytheft.gov or by phone at 877-438-4338. Scam Protection 101. Scam protection goes hand in hand with identity theft. Some tips and suggestions that can help protect you from scams are make sure to guard your personal information. Something good to do is using two-factor authentication, which gives you an extra layer of protection to ensure the security of online accounts beyond just a username and password. So it's always good to have two-factor authentication. Try staying safe online and don't send any sensitive information virtually. Do not open suspicious texts, pop-up windows, or click on links or attachment in emails, and be sure to delete them if they're suspicious. Keep your cell phone and computer secure. Beware of any requests for your personal details or money. And then sign up for online billing and financial statements to help reduce the risk of personal information being stolen from paper documents. Loans 101. A loan is when money is given to another party in exchange for repayment of the loan principal amount plus interest. Florida Financial offers a range of loans such as auto, home, mortgage, personal, live your life loans, and more. Some tips regarding loans are be sure to assess your need for a loan and always take a loan from a credible financial institution. Check your credit reports because your credit score and credit history are major determinants in the interest rate you receive on a loan. Be sure to gather knowledge on lenders and always make your loan payment on time and try and pay more than your minimum amount. So, debunking myths 101. So I came up with some myths that I'm going to go over with you all. And the first one is that you need to have a lot of money to invest in the stock market. Good news, this is actually false. You don't need a lot of money to start investing. In fact, you could start investing in the stock market with as little as $10. Even tiny moves can lead to growth and make you money. The next one is it's too early or too late to start saving for retirement. This is false. It's never too early or too late to save for your future and for retirement. The earlier you start saving, the more money you will have later on, so you will thank yourself in the long run. And if you haven't started, it's never too late to start building your savings, and no amount is too small to start with. The next one is making the minimum payments every month is the responsible way to pay off your credit card. This is false. Making only the minimum payment on your credit card keeps your account in good standing and avoids late fees, but that's about all it does. Paying only the minimum will make it take longer for you to pay off debt and will rack up your interest charges. It's always beneficial to try and pay off more than just the minimum payment. The next one is credit cards should be avoided. This is false. Credit cards are beneficial to use since they help you build credit as long as you use it responsibly and pay the balance monthly. The last myth is you should cancel old credit cards you aren't using. So this is false. It's actually best to keep unused credit cards open so that you benefit from a longer average credit history and a larger amount of available credit. If there is one that is old or you don't use much, sometimes it's good to use it every once in a while, just a couple bucks to get gas here and there, just so you're still active with it. But it's definitely best to not fully close it so that you have a longer average credit history and it doesn't mark your credit report. We have fun financial tips. We Florida Financials partnered with Zogo to provide you with a gamified financial literacy app that teaches everything from opening a bank account to saving for retirement. If you use this app, you can win rewards for completing financial literacy lessons on saving, spending, and managing your money. It's a free app that teaches you about finance and pays you to learn. So if you're interested in downloading it in the App Store, it's Zogo, and you can use code WeFlorida to sign up. We care about your financial literacy. We Florida Financial has also partnered with Consolidated Credit and Coffee to help you and your family get financially fit. So they host free webinars on a range of topics regarding financial literacy the second Wednesday of each month. To register, you can check out weflorida.coffeetime.com and use code WeFlorida to register. Their next free webinar is in May, and it is Surviving the Unexpected is the topic. We Florida Financial is also hosting, continuing to host our free monthly webinar series on topics regarding financial literacy. To register, I provided the website on this slide. And the next webinar I'll be hosting will be on May 25th, and that will be Money Talk for Teens and Students. How to join We. How much does it cost to join? There is no fee. You simply open your savings account with a minimum of a $5 deposit, and this will represent your share of credit union ownership. As long as your $5 stays on deposit, you're eligible to benefit from any credit union service, including applying for loans, mortgages, and more. You have to live or work in one of our 46 Florida counties, including Broward, Miami-Dade, and West Palm Beach, or you can be a family member of an existing member. To become a member, you can apply online at wefloridafinancial.com, or you can go in person to any of our branch locations. We connect. So these are our social media handles. We're on Facebook, Twitter, LinkedIn, YouTube, Instagram, and TikTok. They're all We Florida Financial, except Twitter is We FL Financial. If you want to follow us for updates, things we're promoting, events we're getting involved in, and things like that. Okay, so do you want $25 on us? If you sign up at wefloridafinancial.com and enter the promotional code community25, when it asks how you heard about us, you will get a free $25 on me. So if you do want to become a member, whether you want to sign up online or in person, make sure you use the code community25. And then after 90 days of having an account active with us, you will receive that money. And once again, my email address is hcampbell@wefloridafinancial.com if anyone has any questions or feedback following the webinar. And I really appreciate you all logging in today and taking some time to learn about financial literacy during Financial Literacy Month. Feel free to email or call me if you have any questions regarding the presentation or about We Florida Financial and how to sign up. And I hope everyone has a great rest of their day.